What's up, guys? I'm just going to do my half one returns here. Try and get through them quick. Pretty nasty second quarter for me. I was up by 12% on the S&P in the first half, or the first quarter. Had a 20% return at the end of quarter one, and I ended the half only up 10.8%. So whereas the S&P went from a 7.5% return in quarter one to a 15.9% return in the first half. So I got absolutely trounced in the second quarter by the market, and for this half I'm down 5% from where the S&P is. So the S&P beat me by 5%, and that brings my 18-month total to 5.8% outperformance on 18 months. So like I said, I'm going to keep this going and see how I do over 5 years. It's pretty hard to tell over a quarter or a half or even a year. So we'll see. I was up on the market by quite a lot more going into this year, and so I'm not sure how much value I'm adding here. Anyway, I got to be honest with myself and keep an eye on this stuff as we go along. Still a little bit of beat, but maybe nothing significant at this point. So the first half results were, so StoneCo and Meta did really well. StoneCo is my biggest position. I actually added 20% to the position as it broke out above 12, and that is actually at 34% of my portfolio right now, just based on that extra add and the price running up. So the price is up 35% in the first half, which is quite good. Meta did even better. Meta is up almost 140% in the first half, but I have been selling that on the way up. I've sold now 75% of the original position I had. So I think overall my return is about 100% on the original purchase, and I've only got a 5% position left in the portfolio. So those are the winners. The losers were, well, what happened was at the end of the first quarter, a lot of my stuff was sort of finished the quarter on a high, like Flow Traders, Alibaba was doing well, and ASOS was doing really well, and those all got beat up in the second quarter. ASOS was the big loser. I mean, I lost I think 50% from the end of quarter one. For the year, it's down 17%, and I did sell it at about $5 US. So that was a pretty big loss for me, and that's probably the biggest reason for the underperformance here. If we look at Flow Traders again finished good at the end of the first quarter, but it's back down and finished at about 20 euros on the year. The second quarter is likely going to be weak for them just because they have, they depend on volatility in the market to make money, and there was really not much volatility anywhere in the second quarter. So I'm expecting a pretty weak earnings number for them, and they were, because that's such a big part of my portfolio, that being down 6.5% on the half makes a difference to the portfolio. So that was a loser. I do think if the market falls and volatility picks up, this stock will sort of act as somewhat of, well, it'll at least act as an earnings hedge. And I would expect from 20 euros, it'll probably act as a price hedge too. What else was not good? I bought some Mobrook early in the year, and that took a bit of a hit, but I'm still adding to that position. I think overall I'll add a little bit more if it comes down, and I think that the rest of the stuff didn't have a big impact. Let me just look here quickly. Oh, Alibaba, I think actually, because it had a bit of a spike in the middle of the first half, and the end of quarter one, it's come down from there. So that's part of the reason I underperformed the market as well. This year it's down 5%. So Alibaba just keeps on being a laggard, but I think at some point it'll probably pick up. That's almost 2 years since I started buying it, and I still think it's a great business, and just have to wait for some of the geopolitical noise to die down. Maybe it won't, maybe it will. I couldn't tell you. But anyway, that's the result from the first half. I have to eat a bit of humble pie here, but I've heard that that's good for you. My experience is that humble pie is good for you to keep you level-headed, and let's hope we do better in the second half. Thanks, guys.